Hey everybody, welcome to today's daily market commentary. It is Wednesday, the 29th of November. Hope everybody had an absolutely amazing day. I am your tour guide, if you will, for the next few minutes. Chuck Fulkerson, I'm going to kind of guide you through the markets as best we can. We are a little bit early today, but I think we've got most of our major movements shaken out for what happened in the markets today. So, for those of you that are new to the channel, thank you for joining us. Great to see you. We do the same thing every day. We look at the same 10 to 12 futures markets. We leave our lines on the charts so that we can see how levels create and form. Doesn't mean that you will look at the same levels and take the same trades, but we try to be as educational here as we can so that you can ultimately get more comfortable trading less markets, but doing it more effectively. So let's go ahead and get into it. So go ahead and kicking it off with the S&P. So today was a day where we had a fair amount of, a fair amount is relative, but based on what we've seen for intraday movements in the S&P, we had a pretty big move down on a sell-off basically in the FANG stocks. Some sell-offs in stocks like Apple really led the way to the market movement. We had a big sell-off in Facebook, and those FANG stocks. Netflix sold off, and those don't have as big of an impact on the S&P. So the S&P, while it fell, didn't come anywhere near our level that we believe is a good buying point and our support line. So we believe that there's going to be some support down here at this 2605 by 2602 area. If price does indeed come back down into there pretty soon, didn't come anywhere near there. We also didn't put in any reasonable selling opportunities either. Sometimes you'll get a decent selling opportunity off of a big move down like that, but really none of this is really a pattern that I would be looking to be shorting off of. So as it stands now, I'm still a buyer of the S&P on a deep enough pullback into this range for the S&P in general. Now, the Nasdaq, the Nasdaq took a fadunk today as it came down really hard. It was really down 110 points in the Nasdaq, down 1.72% as of now in the futures markets, whereas the S&P was only down 0.07%. So significantly underperforming the S&P was the Nasdaq. But here's what's great is that we didn't really have any. We weren't trying to pick any of these bottoms, these turning points, because none of these were high probability areas. So it's not like we would have gotten any of our trades blown through because we're going to be more selective on the trades that we're going to take. And in doing so, it really, should have had me out of the way of this freight train. I was talking to a friend of mine today, and he was looking at a 5-minute time period and was able to catch a large part of this movement. And I want to really kind of highlight the setup that he had found, because I think if you look at the setup, though it's on a 5-minute chart, and I don't spend a lot of time on 5-minute charts, the setup that a friend of mine had sent me and had found really is very telling. And I want to talk about, he had highlighted that he shorted right here, which, high five, right? High five to him for shorting right here. Well, why would he short right there? So looking at this area, this is a fair price region, a little bit of sideways before that nice move down. Tells me there was some fair price in there. Price returned to that fair price area and used it as resistance. But why did this one work? Well, I looked to the left a little bit to see why this was so effective. And as I look to the left, I'm paying attention to this area right in through here. Now, what I'm specifically looking for in here is that, we'd had this region. Hold on a second here. Kind of drew it the wrong way. I meant to draw it down here. This one, this is kind of a central price, but with this strong move up, we had hit it and come back up again, hit it again and came back up. You can see that little wick tells me we came back up a little bit, came into it, found more fair price before then falling. Now, what does this mean? So let's talk kind of through what this means. What I see when I look at this is a fair price there that the market believed between 64.20, 64.22, in that range. Price came price moved away from there very quickly, which means that there were still people that wanted to buy at this price range. Price came into it, boom, moved away. Eliminated some of those buyers, but there's still now people that want to sell in this range. Price came down into it, boom, hit some of those buyers, but more of those sellers started piling on, and to the point where those sellers wiped out every single buyer in this price range and price fell. But it doesn't mean every seller was able to get their trade off. And so when price did return, those sellers now had an opportunity to get their trade off, and there was a strong move down from that region. This is kind of a call it a flip of buying and selling right in this area, and this is what gives you a higher probability entry point. So even though it's on a smaller time frame, that's really a setup that I look for very frequently. That setup where, old areas of support are going to become new resistance, but it's not just old support becomes new resistance blindly. That, I think, is a terrible mistake. It's more along the lines of the logic behind why it works. And the logic behind why it works is really the most important part behind there. So now, we certainly didn't catch any of that based on what I had showed you on the hourly charts, because I try to stay on hourly charts and above. And we're also only really looking at these at the end of the day. And so when you're only looking at these at the end of the day, you're going to miss a lot of those intraday opportunities. And I'm really trying hard for this particular video not to show you levels that occurred throughout the day that I haven't already talked about. I want to try to keep this as clean as we can when we do the video. Crude oil. So let's take a look at this crude oil level. Now, this crude oil level blew right through. I did think we'd get a little bit of a stopping point in here. We were not able to get that. Now, if you're more aggressive, you may have taken this whole pivot area. And this whole pivot area was probably the right way to go. Hindsight being 20/20. Hindsight's not 20/20. It's 10/10, right? It's just we weren't able to get there. I don't even know what that means. But price hit that area, came down into it, and now we're starting to get a little bounce off of it. This one certainly didn't work out. I was really probably being a little overly conservative in here, trying to take a tiny little range when I should have widened it out. So that's really up to you on how you look to take those kind of going forward. I was a little bit too aggressive on my level in there. So now I think that we are putting in a little bit of a reversal right through here, and we could see price coming down out of that region. Gold, we're coming close to our gold entry point. Hasn't gotten there yet. However, I will state that the way that we're getting to this gold entry point is not our strongest move in. So you might want to do candle to candle trading once it hits this area and as it starts to come back out, depending on your risk tolerance and how sure you are going to be of it. My fear is that let's just say that we get a big red candle down into this region. Let's just say that we do. Well, now all of a sudden, if we were to wrong button there, if we were to get a big red candle down into this box, then all of a sudden, this is where I would have to look at my opposing fair price area. So does this allow you enough reward to risk to make it worthwhile? Now, this isn't my only fair price area. This would be where I would move my stop to break even or take some off the table because it's the opposing fair price. This is ultimately where the better target would be, somewhere up around 1295, 1296 in that range. So the level's still valid. It's still there. Just be a little bit cautious with it right now. All right, a couple of other markets to take a look at for today. Bond market still not anywhere near our level or our opportunity. However, I do like this little one that was put in right through here in this region, and I'm probably going to make this a bit wider than some people are comfortable with. And if you're not comfortable with that much with a spot that wide, you might want to go to a smaller time period. Maybe you can splice into this thing, or maybe just do candle to candle trading, wait for it to start to come out. But This one I think is pretty good, mostly because it acted as support all through here, which I think could then turn around and act as resistance through here. So keep that area in mind, on the hourly chart for the 10-year note. The Aussie dollar, we had set up the confirmation entry on the Aussie. Price hit the confirmation entry, moved out, was working profitably. Talked yesterday about moving the stop and getting out of it because we thought it was about done, and we were correct. That thing is over. So now as I look, I've still got this breakout short below this area here. Nothing up here is really super high probability. Maybe this one up here, but we're still pretty far away from this region at the moment. So I'll leave it in there, but that one worked out for a nice little profit for those of you that were able to take it on that one. The euro working out for a nice little short opportunity, kind of coming out of this range here. So hopefully some of you are able to catch some of this euro trade, as this euro has been moving down off of our little short trade from there. I'm going to remove this level now, as it's not going to be valid going any further, but hopefully some of you are able to catch a little move out of that euro level. And last but not least on this page is the Canadian dollar, and we did not get to our Canadian dollar entry point as of yet. Last page, let's take a look. I want to take a look primarily at the Great British Pound and the Japanese Yen. So let's start with the Japanese Yen. The Japanese Yen, we have made our entry into our hourly time period. I am not a big fan of the way we've moved out of here. So for now, depending on your risk tolerance, you might want to take that stop, move it to break even. Since it's not giving us a very strong reaction out of this level, I don't really like to give it a lot of wiggle room, a lot of time. When I want to be right, I want to be right fairly quickly. When I want to be wrong, I want to be wrong very quickly, right? But when I want to be right, I want to see a good reaction off of there, a good bounce. Think of it like bouncing a tennis ball. I got a better one. Think of it like bouncing a basketball off the ground. All of us have held a basketball in our lives, and then when you drop a basketball, if it's got lots of air in it, if it's a very full basketball, it's going to bounce up very high, very quickly. You don't really need to push to dribble it. What if there's not a lot of air in that ball? Well, then it's going to bounce, but it's going to bounce kind of, yeah, that's a technical trading term. And if it bounces with that, it may not be a great, ball to play with. Well, that's kind of what we're getting here in the yen, is we're getting a bounce that's kind of, so I'm not so sure that this one is going to, give us a huge run out of this region. It is one to keep on your radar if you're already in it, and maybe start to make sure those stops are protected. Let's look at the Great British Pound. Now, our rules on a dashed line is that price has to trade into the area, and then come out of the area before we get into the position. And if it breaks through that top line, then we're not going to take the trade. So in this case, we should not have taken this, as it came out right through here, because it violated that rule right in through here. I want to see it pierce that line by at least 33%, as it comes in and starts to head back out. So the other reason that I wasn't in love with this is look at how we just kind of chopped around before going into it, right? That chopping around before we go in is going to not make it as high probability of an area. So let me remove this one. Going forward, I'm going to go to a daily chart to look at the pound, and you see that we're coming to a potential area here of imbalance on the daily, but I'm going to leave that thing be for right now. There's really nothing on there that I'm in love with. When I even go out to a weekly, we've actually got a fair amount of room to roam, especially if we break above the daily highs. There's some room to roam on the weekly chart. I think it's not inconceivable that we could see the pound get back up to 145. It's a possible that it could get back up there. We've seen the pound really have a lot of strength. Pretty much the whole year it's on an upward trend channel. For those of you that are followers of trend channels, I mean, we are in a pretty nice upward trend channel, and we're at the bottom of an upward trend channel. So 145 would really be not out of the question at all for the British pound over the course of the next few months. So that being said, I hope everybody had a great trading day. If there's anything that you need, do me a favor, send me an email, chuck@iiefinancial.com. Anybody that you hear of that's looking for some financial advice or wants to talk to an advisor, I believe I'd be happy to give them my thoughts and opines. Just have them reach out and go to the website, iiefinancial.com. So talk to you guys soon, and I hope you have a great day.